Welcome to today's market report. European stock markets are set to open lower Wednesday, with the second half of the year starting with worries about the COVID-19 outbreak still prominent, even as data releases offer hope of global economic recovery. The DAX futures contract in Germany traded 0.4% lower, and France's CAC 40 futures were down 0.1%.
UK FTSE 100 index is seen opening 18 points higher on Wednesday, according to financial bookmakers. Ryanair expects to fly more than 4.5 million passengers in July as it returns to a more regular schedule with 40% of its usual capacity for the peak summer month. Lloyd of London says Black Swan reinsurance schemes backed by governments could help businesses get insurance payout after huge shocks such as the coronavirus pandemic. RYA.I said on Tuesday it has agreed to buy renewable gas known as biomethane from Denmark's Nature Energy in what the smaller company termed the largest deal of its kind. British travel food group SSP will cut up to 5,000 jobs due to the impact of the COVID-19 pandemic on international travel, Sky News reported.
China's factory activity expanded in June, with the Caixin Market Manufacturing Purchasing Managers Index rising on Wednesday to 51.2 from 50.7 in May, marking the highest reading since December 2019. Through strong U.S. housing data and a rebound in consumer confidence in Europe, the recovery from the coronavirus-inspired slump looks well underway. U.S. manufacturing activity data due later today is also expected to show a recovery from April's depths, while the non-farm payrolls report on Thursday is forecast to show the U.S. economy added 3 million jobs in June. Nevertheless, the resurgence of the COVID-19 virus around the world, particularly in the US, the world's economic engine, threatens to derail this nascent recovery. The US recorded 47,000 infections on Tuesday, its biggest single-day spike since the pandemic began, and this surge has promoted populous states like California, Texas, and Florida to restrict economic activity once more. The country's top infectious disease expert, Anthony Fauci, said clearly that we are not in total control now, and cases could increase by as much as 100,000 daily if the outbreak is not contained. Turning back to Europe, German retail sales jumped 13.9% in May, rebounding strongly from April's 5.3% slump. More indications of the region's recovery will come in later in the session in the form of manufacturing PMI data and German unemployment numbers. Oil price pushed higher Wednesday, helped by American Petroleum Institute data showing a much larger than expected reduction in U.S. crude stocks last week, which suggests a bump up in demand even with the re-emergence of the coronavirus in a number of states. Official inventory data from the U.S. government's Energy Information Administration is due later. Crude oil WTI futures traded 1% higher at $39.67 a barrel. The international benchmark Brent contract rose 0.9% to $41.64. Gold futures rose 0.1% to $1,802.45, breaking its 10-year high. On the FX front, the British pound was given a further boost as the EU's top negotiator Barnier provided some positive soundbites, but GBP/USD remains capped by the 124 level. OCBC Bank is looking to the downside, specifically to the 123.50 mark. According to the UOB Group, cable is likely to move within the 122.80 to 124.80 range in the next weeks. It is noted that the oversold conditions and slowing momentum yesterday and expected GBP to consolidate between 122.50 and 123.65. The UK Express replied on a leaked document to state fears of a ban onto the British exports to the bloc union if they don't have the correct clearance from tax authorities. Other than Brexit events, the pair also bears the burden of the US dollar recovery amid escalating tension between US and China, as well as the fears of the virus wave 2.0 based on worrisome figures from America. Eurodollar is trading just under flat at around 112.31 as Wednesday's 4-hour chart is showing a double bottom is supporting the pair, setting the initial resistance at 112.65 according to FX Street. The pair is trading at a 0.05% decline on the day, near to the 111.72 Fibonacci support. Commerzbank's Karen Jones expects the Eurodollar pair to recover from there and targets initially the March high at 114.95. The dollar has drifted in early European trade Wednesday with worries over the resurgence of the COVID-19 virus competing with encouraging economic data for prominence. The dollar index was largely flat at 97.343, while dollar yen was down 0.2% at 107.67. This is today's market news. Thanks for listening. We'll see you next time.